Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. We're starting to see economic bite from Trump's war on Iran. There is corrosion everywhere today. The latest OECD economic update says global GDP growth is expected to hold at 2.9% in 2026 before rising slightly to 3% in 2027, driven by strong tech investment and easing tariffs. But the ongoing Middle East conflict makes these projections wobbly due to the energy market disruptions. Inflation forecasts were revised upward, with G20 advanced economies facing 4% headline inflation in 2026, they say, 1.2% percentage points higher than previously anticipated. And they see American GDP expansion go from 2% this year to 1.7% next year. For China, they see the shift from 4.4% in 2026 to 4.3% in 2027. For Japan, it's stable at 0.9% in both years. Their forecast for Australia is 2.3% growth this year and 2.4% next year. Back in the US, jobless claims dipped last week, but not by as much as seasonal factors would have indicated. There are now 2.04 million people on these benefits, down from 2.07 million a year ago, but up from 1.8 million 2 years ago. Meanwhile, the Kansas City Fed March factory survey was positive again in March for a second consecutive month. The month-on-month indexes were all positive, except for new export orders. And the overnight US Treasury 7-year bond auction brought similar results to the earlier 2- and 5-year events, lower offer volumes and much higher yields. This latest 7-year bond had a median yield of 4.19%, up from 3.74% at the prior equivalent event a month ago. Bad management brings higher risk premiums. In China, state-owned China Eastern Airlines settled by 101 Airbus aircraft in a deal worth about $16 billion, extending a run of big-ticket Airbus orders by major Chinese carriers. That will juice up Airbus's 2026 order book sharply. In Singapore, manufacturing production fell by 0.1% in February from a year ago, reversing the 12.9% surge in January. This February result was the first month of decline since August last year, driven by weaker output across nearly all sectors except electronics. And overnight, Norway's central bank kept its policy rate unchanged at 4%. But they do see a hiking possibility in 2026, a term from where a cut was more likely. Global container freight rates rose 5% last week from the prior week and are also 5% higher than year-ago levels. This latest rise makes these costs up 20% from the end of February. Outbound rates from China were the main driver for these latest rates, and the overall index would have been much higher except for the decline in EU to US rates. That trade has shriveled, but down by 29% year on year. Meanwhile, bulk cargo rates rose 3% in the past year, but are 22% lower than year-ago levels. The US Treasury 10-year yield is now just on 4.42%, up 9 basis points from yesterday, and its highest since July 2025. And the price of gold will start today down $173 from yesterday at $4,383 an ounce. Silver is down $4.50 at $68 an ounce. But American oil prices are up $4.50 at just over $94.50 a barrel, while the international Brent price is up $7 at just on $108 a barrel. Ship transit traffic in the Straits of Hormuz, already low, has dried up again. And the Kiwi dollar is 50 basis points lower against the US dollar from yesterday, now at 57.7 US cents. Against the Aussie, we're unchanged though at 83.6 Australian cents. We're down 50 basis points against the yen as well. Against the euro, we're down 30 basis points at just on 50 euro cents. That all means our trade-weighted index starts today down 40 basis points at just on 61.6. And the Bitcoin price starts today at $68,909 and down 3.6% from yesterday. Volatility over the past 24 hours has been moderate, just on plus or minus 2.1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.